Hello, Culture Matters podcast. Boy, am I excited about today. Before I introduce you to our guest, here's a quote just for this episode. Real estate investing, even on a very small scale, remains a tried and true means of building an individual's cash flow and wealth. Robert Kiyosaki, our guest today, is a real estate investor, advisor, in and outside of the mortgage and lending industry that we're going to talk about today with Unlock My Wealth. Um, Somewheres around a decade plus ago, they started investing in something we're going to talk about today first, trust deeds, and change the financial trajectory of their life and their culture. And today, they teach others how to do what they do and create success in wealth building. And a big, huge part of the Culture Matters podcast for our listeners, if they don't know, is our dear friend who's been on the show a million times, Tony Capullo, who introduced me to this awesome person, Michelle Morgan. So shout out to Tony for that. Love you, brother. And thanks for coming on today to teach us about this concept and framework for building wealth. I know that the listeners need to learn, considering all the things happening in and outside of real estate. So thanks for coming on.
Well, thank you for having me. It's an honor to be here, and I look forward to sharing, with your viewers this concept that is kind of a hidden concept as far it's the real estate investment strategy that you don't really hear a whole lot about because it's not for the very brand new investor. It's one that's has some seasoning, has some financial backing behind them. So they're not at the very entry level. You have a little bit more skill sets involved in this type of investing.
What would you say are some base skill sets that would be good for the listener to start honing, as they listen to this?
Well, first, I think the important thing is to understand what a trust deed is.
Hmm.
A trust deed comprises of two documents. It's the promissory note, and it is also a security instrument. And depending on the state, it's either called a mortgage or a deed of trust. Okay, you put those two documents together, you have a trust deed. A first trust deed is something that when a loan is paid off, the lender in the first position gets paid off first. That's why it's called a first trust deed, because you're in first position. So that's just understanding those concepts. Those two documents must go together. If they don't go together, if one's missing, then you don't really have any security behind the mortgage note. So it's a form of lending.
Hmm.
When you buy a trust deed or you invest in a trust deed, you essentially become the lender, which
Hmm.
is a different concept. Whereas if you buy a rental property, you become a landlord. Well, if you buy a trust deed, you become a lender.
Got
And
it.
you have all the rights and privileges according to the promissory note. So you will receive the monthly cash flow, the monthly income that comes each month
Without having to landlord,
without having to landlord,
without having to be a plumber.
without plumbing.
That's good. Okay. So secured by the real estate,
Right.
mortgage plus deed means that I'm going to get that income coming to me.
Correct.
What type of okay, so what type of skill sets do I need to hone to be able to know what I'm doing in in investing into these promissory notes, essentially, or
Right. I have a system that I use that I've basically taken from my mortgage background,
yeah.
and I just incorporated in my investing. So it kind of went hand in hand. So it was easy for me. Basically, I do a lot of research on the company that I'm buying my deeds from. You want to make sure you do your due diligence, that these are I have a series of about 8 questions that I ask companies, like, where do they get their deals? Who are the principal owners? How long they've been in business? Who have they done business with? And how many transactions have they completed? Have they had anything go sideways and go into foreclosure? So there's a lot of company due diligence. Then once you get past that, then you go into looking at the property, and then I look at the borrower. Because if the property is not where I want it to be, in a state that I don't invest in, then I don't need to look any further, because it's not where I want it to be.
Mhm.
I have purchased notes in about 10 different states. And so I just look at certain things where the property is. I look at, is the population in that area growing? Is the real estate market, how stable is it? Are properties moving in that? Because the deeds that I buy are hard money deeds. So they're quick, short term, 12 months or less. So those are the skill sets that I teach people to look for, and via a checklist, which makes it simple. It's a checklist.
Mm.
And so those skill sets, you start looking for things, and you're like, check off, okay, that meets that criteria, it meets this criteria. So it's nothing that you need to memorize, but you need to know that you need to look at it.
Mm.
So
What's hard money for people that have never heard that term?
so hard money or private lending is where real estate investors go, so that they do not have to go through your typical mortgage broker or mortgage lender. It's asset-based lending. In other words, they base the loan amount on the value of the property, the after repair value of the property. Usually it's about 70%. And so when hard money is for short-term loans, that they use the property to qualify, they don't use the borrower's credit or income or job history. Because they're basically real estate investors.
Wow. So,
Mhm.
are we benefiting from those entrepreneurs that are taking these risks at some level?
Yes, we are, because, well, not advantage in a negative way, but we're helping them
Oh, yeah.
pursue their
Partnering.
dreams. Yeah. So basically, because I'm a lender, and they want to say they want to rehab a home, and they're going to make a good fair amount of profit in the end. We help them achieve their dreams by
Mhm.
lending them the money. So that's kind of, the advantage for them. They don't have to jump through all the hoops as a regular lender. They would have to, if they went to a regular big box bank, they would have to jump through all those hoops, and most likely will not qualify.
And as part of that, they may not have the capital, but they might have the intellectual property.
Exactly. They will have some of that intellectual. They know how to calculate what they're going to do, how much it's going to cost. They've contacted their contractors. They know, okay, if I buy it for this much money and I put this much money in, they also know how to calculate what the value is going to be and what they can sell the property when they're done rehabbing it and bringing it back to life, basically.
Have you found that there are certain like what are some signs that the deal might have a higher risk? Not necessarily it's no deal, but the risk could be higher.
Um, for me personally, there's all different ways of, a person's personality, and I'm pretty conservative. I only buy deeds in non-judicial states. In other words, I don't have to go through the court system in the event that I have to foreclose on a property, because in the end, I am the lender, and I
Hmm.
have the right to do that if someone doesn't make their payments. So I eliminate that by just going through non-judicial states, because I don't have to go through that court system. They just file what they call a deed in lieu document, and
Hmm.
then they basically sign away and hand you the keys.
In those situations, what would one, how could one protect their, let's say, principal.
So how they protect it is it's secured by the property itself. Because you only lent at 70% loan to value, you already have an equity position of 30%. So if
Mm,
you have to take the property back, then you can sell it, keep it as a rental. And because it was to be a rehab property, most times the rehab's going to be complete.
mm.
And so now you've got this property that's 30%, under market. It's either going to be a rental or you can even sell it, recoup all your costs. In the 12 years that I've been doing this, I've only had to take one property back.
Wow.
So it's because these are entrepreneurs as well. They want to be successful rehabbers and flippers and make their profits. So we're helping them achieve their dreams as well by lending them and taking the risk of loaning them the money.
What did you learn from that one?
That one was a strange one because we use a loan servicer who helps us. It's like the between the lender and the borrower, and the property was done. The rehab was completed, and he just didn't want to wait to sell it. We really never found out why. He just gave the property back. It was the most bizarre thing. So you will find some strange things that you just have no answers, because each deal is so different.
Mm,
I had one recently that she almost had to go into foreclosure, and I didn't want to do that. And so what we did is we worked with her. How much time do you need to sell it? If you reduce the sales price and we work with this, and we gave her some parameters, we'll give you the time. Because when a borrower doesn't make their mortgage payment, they're in default, and we can move forward with that. But I would rather not go that route. Also, there are things that make it advantageous for us to work with them instead of
mm.
just going through the foreclosure process. So this particular deal, the normal interest rate was 10% that she was paying. The penalty interest rate was 25%. So for 3 months, she had to pay 25% before she sold the property. So I actually made more money in the end. So it benefits investors to actually work with their borrowers.
What's some advice on how to actually work with people that are under duress, stress?
The best thing is stay calm. And I personally, because I have a lending background, and you use the loan servicing company. I don't talk to the borrower directly. I use a loan servicing company, and I send an email there. Okay, they can do this, this, and this. If they need a loan program, I have a loan program. I can help them if they want to. Or the loan program, here's what you can do. And if you can get it to the borrower's realtor and see how that works. And so I think even if they don't take you up on it, I think they're really more motivated to see that you're trying to help them and not just wanting to foreclose. Because really, I didn't want the property. I'd rather get my capital back
Yeah.
instead.
What was the inspiration to get involved in all this to begin with?
I had sold a piece of property, and at the time, 12 years ago, interest rates in a savings account or CDs were about 1/4%. And that did not hedge inflation. So I thought, as a lender, okay, well, wait a minute. Why can't we just loan out some of this money as a hard money lender? Well, in Las Vegas, you can't just loan out money like that. You have to go through a broker. So we found a broker, and then I just, kept learning more and more about the business. For us, it evolved. And now I'm doing it, strictly as a single woman. It's a skill set that no one can take, and it keeps me afloat. It's a great skill set to have, and it's
Hmm,
not that difficult to learn. So
hmm.
to get involved in it, and the return on investment was, my average ROI is about 10%. And I get, that's pretty good over the last 12 years.
Wow. Well, and the timelines are shorter than a year. It depends on the opportunity.
It just depends on the borrower. The timelines, the longest I've done was 5 years, but that was at the very beginning. Now my average timeline is anywhere from 6 to 8 months. And I like shorter timelines only because that your money's not tied up so for so long. And whatever earnings I get, I can turn around and either buy a bigger note, basically I'm compounding it myself. I take what I
Mm.
earned, and I can use part of it to do what I want to do with the money as well. So it just depends. I have parts of it going for my retirement and parts of it just to live off of.
Do you find that loan officers, like, yeah, those that help the individuals, you know, buy homes and achieve those dreams, they this comes naturally to them or unnatural?
It's unnatural for them. It should be a natural thing, but they don't. I don't think, and this is what I'm trying to get out there. They don't think that they can do this, and yet in our business, in the mortgage industry, it's done every single day, but in the millions of securitized mortgage loans, they're being mortgage backed securities, they're being securitized and sold off on the stock market. What I do is on an individual basis, 1, 2, 3 loans at a, it's on an individual basis, not on the $1 million scale. So it can be done. And I'm surprised that but they just don't know how to go about it, how to
Mm.
find the deal. That's a tricky thing to find it. And I happen to, find the hard money side of it. And because there's different kinds of mortgage notes that you can buy as well. There's distress notes, there's funds that you can actually, if you don't want to do a lot of the due diligence, you can do it, invest your money in funds, in note funds. And so there's a lot of different ways of doing this investment strategy.
Is it accessible to most people?
It is accessible in the sense that, like I said, this is at the very beginning where you're wholesaling properties where you don't need any money. You need to have some capital here. And once you have this capital, or if you're an accredited investor, then yes, it's accessible to them. They can go ahead and qualify. And I think accreditation means they've made $250,000 as for a couple 2 years in a row, or they have a net worth of $1 million, not including the home that they live in.
Mm.
So that's accreditation because they want to make sure that you know what you're doing, because we're not, there could be some substantial amounts of money being done.
Mm.
Yeah.
When you were young, did you envision you become a bank?
No. No, I didn't even know I'd become a mortgage loan officer. I was a fashion major. I thought I'd be, working in
Huh.
retail and designing clothes. So no, it just I found myself in the mortgage industry very right out of college. And I've just kind of gone through different stages of my career and then became a stay-at-home mom for a very long time. And that's where I learned how to invest in trust deeds. It was while I was a stay-at-home mom and I had 3 teenagers at home and trying to make ends meet, just like, how can I do this? And it helped out a lot. And so I was really pleased with how flexible investing in first trust deeds are. When you invest in, say, securities, if you're waiting for growth and appreciation, you can't exactly take that money out, or you lose that gain, or you're also taxed on them. So with first trust deeds, I've used it to buy cars, pay off debt, pay bills, continuously investing in my retirement accounts. When I did work, I had a 401k. Well, when I became a stay-at-home mom, I didn't know how to contribute to that 401k. So I took everything out. I created a self-directed IRA, and now that continues to grow. So, there's a lot of different ways. So you can use it in different ways in different stages of your life. It
Mm,
has that flexibility. It's just that one piece of the pie that gives you that flexibility while the rest of your, investment portfolio is growing, appreciating, whether it's property, securities, or wherever mutual funds or bonds. This primarily is to create passive income consistently. And
mm.
that's what I've been able to do for the last 12 years.
And what's the self-directed IRA?
So a self-directed IRA is something that it's been around since 1980. I can't remember the exact date, in the 1980s, I believe. And it gives control to you, the investor. So like your 401k, you have no control over it. It's in with the company administrators until you turn 65 or whenever you're able to draw on it, or retire, that's when you get the money. What a self-directed IRA is it allows you to put assets, certain kinds of assets that your normal pension or regular traditional IRAs will not allow you to put in. Like real estate is an alternative asset that you can do. Private equity, you can put into your self-directed IRA. Rental properties, you can put in there. First trust deeds, you can put in there. Precious metals, the actual gold bars, you can actually hold within your, so it gives you a lot more control and expansion of what you can invest in, and it's directed by you. You
Mm,
get to choose. So in essence, you get to choose how much money you make, how much risk you're willing to take, as opposed to leaving it up to someone else to take the risk for you. And
mm.
then you're the one who ends up paying for it.
Someone that's listening that they're at home, they're taking care of their family, they're raising their family, and they want to get started on this. Where would they start? How do they, is it an hour a day, 5 hours a day? It's another job. Yeah.
It the program I'm creating is basically an hour a week just to learn it. And once you learn the skill sets of underwriting the loan, it's a couple of hours a week. And the research and finding the companies takes longer than actual once you find them and looking for a particular deal. That's what takes longer. You can Google and say how to invest in first trust deeds. You'll come up with all different kinds of methodologies, different target. Like I said, you can buy different kinds of notes. I buy hard money notes. You can buy distress notes. You can buy commercial, you can invest in commercial properties. So there's so much out there. So it can get very confusing. So finding a program that allows you, that teaches you how to do this makes it easier so that you don't get lost in translation. A lot of what's out there is also the company itself providing you with free training. Well, with that, they're also trying to get your investment dollars. So, of course they're going to give you free training
Uh,
because they want your investment dollars. What I do is I'm strictly education. I have no investment dollars. I have no place to put your money, but I can guide you as to where you could possibly put your money. And,
got
so
it.
that's why it's so hard to say, how do you get started? Because if you just Google it, you could make some really costly mistakes, in this business, because it requires a good chunk of change before you start
Wow.
investing. Yeah.
Well, and why? What about hard money is attracted to you versus some of the other types of loans?
Because of the short term, the lack of, I guess I have a lack of commitment with my money, and I don't want it to sit there forever.
Sure.
So if you do, like, say, I looked into apartment syndications, the minimum time is 3 to 5 years. that your money's sitting there. You may or may not get a monthly check. You might get a quarterly check. And you have to wait till the end before you cash in all that money. Well, with hard money, it's each month you're getting something every
Hmm.
month, where other types of syndications, your money's tied up and you're not always getting it. Some you do. Like I said, each business model is slightly different. I have yet to find two that are exactly the same. They're
Hmm.
all different, even in the hard money sector.
But every month there's a, what's coming in is a percentage based on the principal invested, and then at the end you get the principal back.
Yes.
That's the
So
concept.
it's based on the promissory note originally. So say a borrower borrows $100,000 to do this deal, his rehab deal. He wants to purchase the property plus the cost of rehabbing. And they're going to charge, say, 13%. What I typically do is I buy a pre-underwritten, pre-funded loan. In other words, there was another broker in front of me. They pre-funded the loan. Then they put the note on the market, and I say, okay, you know what? I'll buy it for 10%. So that's how, and then at that point, I'm getting 10% of $100,000 every month, which equates to like
Oh, okay.
$833 a month that I get until it pays off. And then
Hmm.
you just do it again. Once you do your
All right.
initial underwriting of the loan, then you basically check every month to make sure that your money came into your accounts until it pays off.
And so in that case, it's the 100 you're investing because the person that did it first, they'll get a spread of 3%. It lowers their risk, and you could also benefit
Right.
from the
And
success of the business, the flip.
correct. They found the borrower in the first place. So there, and what happens is like in regular mortgage industry, if I buy this note for $100,000 and they loaned it at $100,000, they get that 100 back. They can now loan it to somebody else. And they're
Sure.
still now making 3%
Yeah.
on money that they got back already.
And then it's lucrative enough for someone else to get involved.
Exactly. So
Ultimately,
it's the
pass.
velocity of money when that happens, is that they're constantly rolling it over. And and that's kind of what I like to do. The velocity of it is just that having my funds keep rolling it over every month, and depending on what I need it for, like I said, I've bought a car before. Instead of paying the car out of my out of a paycheck, I bought a trust deed, and the trust deed paid for the car payments. So there's a lot of flexibility in that, so that you're not using your own capital. I really believe in spend new money, keep old money.
Hmm.
So the old money, you buy assets, you spend the new money that it makes.
And what could be risks or things people should look out for or take into consideration?
I think the risk is first off, not knowing what to look for, not having the proper documentation in the collateral file, the note, the promissory note, making sure that it was actually signed over to you, because there's an assignment that happens to make sure that you actually own the deed of trust. And the risk primarily comes down to the borrower not making the money, their monthly payments. And then you have to go through a foreclosure process, but you get the property in the process.
Hmm. And
However, it could take some time depending on the state.
what
So
do you
I'm
mean?
very particular about
Oh,
which states I do business in, because I want it non-judicial. It'll take a couple of months, and it's cheaper than going through a foreclosure state, which could take 6 months, and you have to go through the court, hire a foreclosure attorney and all of that stuff. So I just avoid that altogether and just stick with non-judicial states, which you just hire someone who takes care of the deed in lieu where they sign a document and they hand the keys over to you.
And then what do? You can put
Then
other
you
people.
own the property. You own the property. You can sell it, you can rent it, you do whatever you want with it.
In theory, you could either lose on that or you could make more than whatever the percentage that you thought.
You
Because now
could most
we went from a bond to equity, or like what meaning we went from a fixed revenue to a variable. Like it could be worth so much more if you
it could it can
increase the
be.
market, right?
Right, because see, you're already at a 30% equity position. If you were to sell that property at 90%, so basically 10% below market, and it does, so now you've just made 20% on, a
Right.
little bit more than what your initial capital was. Now, granted, that's not an easy thing to do because of the fact that it takes time. And that's why that, to do this, you need to realize, okay, wait a minute, how long is this going to take? But like I said, in 12 years, I've only had one.
Wow.
It doesn't happen that often. Most borrowers, and that's why I like hard money, because they want their properties. They want to be a business person. They want to be self-employed. They want to be an entrepreneur. And because of that mindset, they will do what it takes to get that property completed and sold.
Do you are you is there more interest in this money's uh money's more expensive today, or
I think I'm not sure if I think that there is more interest. People are starting to realize, wait a minute, there's this thing out there that nobody knows about. And the thing is, the banks have been doing this same method on the millions and billions of dollar scale. Now I'm just an individual person that can do it in my scale. So everything's kind of relative, and there is more because there's more people wanting to supplement their income, because everything costs more now. So even people who are earning a good salary, things cost more. And they know that, wait a minute, what I'm putting in my 401k or in my pensions may not now be enough to maintain a lifestyle. So I need to find another way to contribute to it. And that's kind of what I've done, is contribute to it. So even though it's been a rough couple of years for people in the mortgage industry, my self-directed IRA continued to grow because I kept investing in trust deeds, and it just kept adding each month money to
if you
it.
if you never did this, what do you think would have happened?
Um, I'd be in a different financial situation. I probably, yeah, it'd be very difficult.
Great.
And it is provided me to be pretty financially independent, considering. And so that's what I love about it, is that it gives you the autonomy. If you master the skills, it gives you autonomy. So no matter what happens in your professional life or you retire, you still have this skill set that no one can take from you, that you keep using to generate income.
Hmm.
So you can supplement your Social Security, you can supplement, because a lot of people have, a good fair amount of money that's sitting in a savings account, not really doing much of anything. Doing a little bit better than 5 years ago,
Sure.
but not much of anything else. And those are the people I want to reach out to, the people who have capital sitting in an account that's really not, it's underperforming. It's not, I mean, 2 years ago, it wasn't staying ahead of inflation, that's for sure. Now it's slightly above the inflation rate, but really every day your purchasing power is diminishing every day. So with compounding, investing is the only way to grow your money. You can't
Hmm.
just let it sit there and hope that it's going to grow, because everything else on the outside, the economy, is growing faster than what you can grow your savings account.
You think it helps your students that you have the mortgage background?
Oh, I absolutely think it helps students because I have an understanding not only on both sides of the coin. You know, I'm a lender on the professional side and I'm a lender on my personal side. So but they both do two different things, you know, so I think that helps. Um, Knowing a lot of different kinds of loan programs helps me, you know, help mitigate some of the risk that is involved. So I'm very fortunate in that. But that's something I could, you know, easily teach someone if they had, okay, what happens here? I'm like, well, this is what we can do. And and you never know what's going to happen. Investing is risky business. And but it's also the only way you're going to become financially independent. Jim Rohn says that if you get a formal education, you will earn a good living. But if you do self-education, you could make a fortune. So self-education, because a lot of this type of information is not taught in our high schools. There are only 18 high schools in the entire country that requires a finance class before they graduate. This is
Wow.
the United States of America, and only 18 states require it. And I talked to some finance majors in college, and they're like, they don't teach us this though. They teach us how to read a balance sheet. They don't teach us how to think about money outside the box, how to make it, how to compound
Huh.
all of this other stuff. They just teach us how to read the balance sheet. And I
Hmm.
thought, wow, okay. And so there's a lot of people I think out there that do have good professional careers. They don't necessarily want to be a landlord, but you know, like you said in your quote earlier when we started, real estate is the way to go. It's secure, as secure as it can get in any case.
Are there books that you could that you would recommend too, or audio books or anything?
Absolutely. There's several books. How There's one book called The Banker's Code by George Antone. And that's how I learned a lot of how to become the lender. And there's some other things right now I'm reading, you know, oh, what is that book? The Millionaire Next
Oh,
Door.
I like that book.
That and that I think I'm going to send to every one of my students because it's just like anyone can do this business. I was a stay-at-home mom for 20 years and I learned how to
Oh,
do this, you know, before I went back into the workforce. And so I still had this. And during that time, I went through a divorce. You can still do this. No one can take the skill sets away from you, and you can still make money without thinking, what am I going to do next?
yeah. What do you say to uh, someone that's in the midst of what you've lived through, like a woman? Yeah. What do you say to them? They may feel like they don't have options.
They do have options. That's the first thing. They may not be the same options that I had, but they do have options. And what I did is because was married for so long, I wasn't the length of time that I was going to be allowed alimony was very short, which is really bizarre, the whole thing. So I was fortunate enough to negotiate and get a rental property that we had rented. And I'm like, okay, well, give me that in lieu of alimony. Then what I did was I took out a HELOC and I bought first trust deeds and created my own alimony.
Wow.
So now I have this house that I live in, and I bought a trust deed that gives me monthly income. So now I was very fortunate. Not everybody's going to be in my position, but that wasn't like that took years in the coming. I mean, I've been a landlord. I've done my share of fix and flips. I've done a lot of that real estate type of investing. So that's why but this is where you know, I can sit at home and do this and not have to get my hands dirty.
Not to mention, you could have just got money and then blown it in Vegas.
I could have done that too, but you
Like
know,
pretty smart moves you made there.
yeah. So it's just, and constantly, you know, the net profit between paying a HELOC, and it gave me a lot of money to live off of, and trying to sustain, and to have this skill too, I think also builds confidence. Any skill, it's not just this particular trust deed skills, but any skill that you have that you can put into the marketplace and make yourself a living, a specialized skill, that's, no one can take that away. You can always use it. And
Mm.
that's what I like to get across, is that, okay, no matter what happens, you lose your job, you still have this skill. You can still make some money. So that's kind of, in the last 2 years, I also was laid off twice in the last 2 years because of the market and
Yep.
nationwide downsizing and companies going out of business, branches being closed. I didn't panic because I still had money coming in. And it's the skill set of having First Trust Deeds constantly paying me consistent income. Tried to change my budget a little bit, but at least it was there.
Will you write a book?
I'm not sure. I've been thinking about it. But I just hasn't quite figured out how much I want to focus on that, or the overall picture of just having certain skill sets
Smart.
that are marketable, specialized skill sets that are marketable no matter what you're doing. And that, I think, gives you autonomy and independence. So in the unfortunate thing with downsizing or people getting laid off or what have you, COVID for that matter, I made money during COVID. Other people did not, because I had this skill set.
Mm.
So I think it's really important to have something specialized.
In closing, what's your word for what was your word or would have been your word for 2023?
For 2023, it was manifestation. I wanted to manifest. I started in the beginning of January 2023. It's like, okay, I need to do better at manifesting what I want. I can't, it's one thing you're writing your goals down and everything, but you really have to put out that vibration. I've learned a lot about putting out vibrations and putting it out into the universe and in being positive about it. So that's kind of what my word was for 2023.
I love it. I'm so glad that we got to do this, Michelle, and introduce this concept that's created success for you to our audience. And is there's one way people can contact you? What's the fastest, most efficient way to get in touch with you? Students want to take the conversation.
They can reach me via email at info unlock-mywealth.com. I don't know if you can put it in the notes or something, because
Awesome.
and that is and I have a website. My company's name is Unlock My Wealth, so they have a Facebook page there, and they can reach me on Facebook as well.
Thank you so much.
Well, thank you for having me and letting me spiel my jam, that I really love this business. And I think other people, when they see the flexibility and what they can do with it, people get excited when I share them. This is what I do with it. And they're like, you can do that with it? Because a lot of investments don't give you that flexibility. So this is the beauty of it.
Thank you so much. Thank you all for listening. And please leave us a review on the Culture Matters podcast. And we will see you next time on the Culture Matters podcast. Thanks so much.